We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelming on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Charles Nenner, president and founder of the Charles Nenner Research Center. Thanks for joining me today, Charles.
Well, nice to be here.
So looking through some of your market reports, it seems that nearly everything you're looking at is giving you a sell signal. So is this a time to really be completely defensive and nearly all in cash in your portfolio?
Well, it's a bit late to be defensive. I mean, we're out of bonds already since, I think, a year. And since last December, out of stocks, out of Bitcoin, actually out of everything except we're long crude oil and natural gas. And we're also out of gold and silver. But we're waiting for a nice tradable low after the summer. That's where the next big trade is going to be. Mm-hmm. As you maybe saw, is that we have a downside target on the S&P of 3709 and on the Nasdaq of 11,180. And if we get there, we might see a bounce. So that maybe we put some cash to work, but that's only short term because it's only going to be a bounce in the longer term bear market.
Mm-hmm. So do you see that particular bounce as having a catalyst of some sort to propel the markets higher, like the Fed reversing course, or is it just a bear market rally?
Yeah, the Fed is not going to change its course. It's just that on my cycle work, the inflation is going to stay stable. That's already something for a couple of months. So that might ease the fears a little bit. But there are always big counter rallies in the bear market. And the point is not to get caught into the optimism that comes always saw the low, because after that, usually you go much lower. Mm-hmm. But you can have a rally of 25-30% before you go down again. You just have to time it as we do based on cycles. And for the moment, I have to question where to put your money. And it's a difficult situation. We have been long all the time the USO that follows the crude oil, and we have been long UNG. It did well. Each one was up like 37%. And we're playing the Bitcoin, which did very well, and short the bonds. It's really a market for insiders because it's very difficult to know what's going on, especially if you would listen to the media, because the media will always continue to be positive, because if they become negative, it becomes even worse. The problem is people continue to listen to the media, and that puts them on the wrong foot. Mm-hmm.
You know, you mentioned inflation there, Charles, and I'd like to get your sense of where things are headed with inflation. You know, you said it's going to remain kind of at these levels. So why is that? And do you think that within the next, let's say, year or so, there's a solution based on supply chains or any of the reasons that have been pointed to by, as you say, the media maybe?
Well, let me put it around. You know why General Motors is coming down? We don't really know, right? You know why IBM is coming down? We don't know. It's because my cycles show since the beginning of the year that the market is going to crash. Mm-hmm. Now, the cycles show for many, many years that inflation is going up. So we can come up with reasons short term why it happens, why it doesn't happen. As you maybe know, my work is based on what happens and when it happens. Mm-hmm. And I'm not sure that the correlation that the experts give are right correlations. Of course, something is in the news is gonna come up, mm-hmm. But the cycle is now up for 30 years. We're now at 8.5%, 9%. I think it's gonna hang around for a couple of months, and then the inflation is going much higher. Now, next time we talk, probably we can say why it's much higher, but I don't know. You just have to know that it goes much higher.
Mm-hmm. Yeah, that's actually kind of why I asked that question in the way that I did, because it seems that you're far more focused on looking at the cycles and in some ways the objective data rather than trying to explain each and every action of the market, right?
Yeah, and I challenge always people on common television, tell a story, just show me how you calculate it, how you know it, but they don't never tell you. Mm-hmm. We show exactly in our research how we get to our results.
Mhm.
And that's based on the fact that markets don't move at random. That means is that you know exactly when something's going to happen, when the market starts going up, going down, and what the price targets are.
So what types of timelines do you analyze on your cycles? Do you take into account several different cycles that have differing timelines based on the asset class that you're analyzing?
Yeah. So if you take a look at charlesnenner.com later, you see that it goes from yearly to monthly, weekly cycles, daily cycles, and we have an intraday service. It seems strange, but with intraday cycles, we can tell you even if you wake up in the morning, if a market goes up, what time it goes up. Let's say it goes up at 8:45, and it tops at 3:45, and what the price target is. That's how exact it goes. So that kind of proves that things don't move at random, that everything is predictable.
Mhm. So how do you use the advance or decline indicators in your work as well? And what inputs goes into building those indicators?
Well, advanced decline indicator I follow is one of the indicators. It's not so complicated. Every day you look how many stocks made advances and how many stocks made declines, and you divide it. So if you have more declines than advances, then the chart goes down.
Mhm.
But it doesn't help you because you want to know in the future what's going to happen. So if you build a cycle on the advanced decline indicator, it shows you on a certain moment. And if you would take a look at advanced decline indicator we sent out, I think on Sunday, you see that it turned down already in June, July last year. So that means already then there were much more decliners than advances. And if you want to know when a cycle bottom has a chance, then you have to take a look when the cycle bottoms, and you're going to have more advanced than declines.
So, Charles, over the past several days, we've seen short-term US bond yields shoot dramatically higher. Does the Fed really pay attention and worry about the rate of change of the yield curve?
I tell you honestly, I listened to Yellen, who is the Treasury Secretary in the Congress, I think last week, and she says, "Yeah, when I said a month ago the inflation is temporary," which Biden took over, said the same thing. Actually, I made a mistake because now I don't think it's temporary, and I don't really know. But I hope," she says, "I hope that there's not going to be much inflation." So it seems they have no clue. And I once wrote them, maybe you should look at my cycle so you have a long-term outlook. It's amazing from number to number. If you ask them, it says, "Well, we'll see how the next number is to make up our minds." They don't have a long-term outlook. So I have no clue what they're doing over there. But again, the Fed is not like a Freudian father figure. I mean, the rates go where they have to go. Whatever the Fed does, it doesn't make a difference.
So are they more worried about, though, the actual rate of change?
I think they're pretty worried because they totally underestimated it.
Mhm.
So I don't think I think they're as worried as the whole market is.
When we see German bunds or Japanese bonds spiking as well, is this a symptom of something bigger within the international markets?
Well, what you're up for the next 30 years having higher rates. So it was very normal that we had low inflation and we had low rates for the last 30, 35 years. And now the cycle is up for 30, 35 years. We can try and figure out exactly what's going to lead to it. But again, that's not my business. My business is for big institutions and clients to see if it's up and how high it goes. And I don't know if the correlation is good. So if you know in 20 years why rates went up, that's a bit too late. So we have now to know based on the work if it goes up or not.
Mhm. Is the Fed's actions of raising rates and running off its balance sheet really the only thing that matters to the general equity markets at the moment, since really traditional valuation metrics seem to have been broken over the last couple of years?
No, because like I said, is if you see all the insiders, and we work a lot of insiders and banks institutions, they start selling in the second half of last year, already knowing what was going to come. But the public doesn't know that. So the insiders can calculate what the Fed funds should be based on the inflation GDP. And then the not insider waits for the outcome of the Fed. And then, oh, the Fed is going to have higher rates, let's sell. But then it's already too late. So you really have to do your own work.
Charles, when we look at gold, does seasonality play a big role to you? I read that you expect the bull market to continue after the summer, but is this more due to the general market conditions or the typical summer kind of doldrums for the gold market?
No, it just happened to be that you see crude oil cycles were up already for the last couple of months, and gold cycles are down, and it happened to be like July, August. That is a coincidence that it's after the summer.
Mm-hmm. What role do you see gold playing in your portfolio? Is it another asset to be traded, or do you see it as a longer term store of value as well?
Yeah, the easy thing with the cycle forecasting is that you don't have to do something all the time, and risk every day is the same. You can just sit aside and wait for a major signal. Mm-hmm. So actually, we're not invested. Well, a couple of things short, like the S&P and the bonds, and we're not long. Well, we just took profit on the crude oil because our price target of 122 was reached, and the next big move is going to be long silver and gold. But you can't force it because the cycle is still down, and we just sit and we know when the cycle bottoms, and then we take a position.
You mentioned that the oil cycle is up and the gold cycle is down. Do they relate in some way to you?
I really wouldn't know. Maybe they do, but I look at everything separate. I try not to make interpretations because they can be wrong. Mm-hmm. And it actually doesn't help me. I could look like a gold crude situation, but it's not needed. We do everything separate, mm-hmm. and it's not always correlated. You see now, everybody would say, "Oh, gold goes down." Why is that? Because inflation is up. So that's a good question. Mm-hmm. So it seems for one reason or the other that has to wait until the summer that everybody wakes up. Why? I have no clue. We'll read it in the newspapers.
Yeah, somebody will ascribe meaning to the move that already happened, right?
Yeah. Once it happens, they will explain later why it happens. The problem with the small investor is they only pay attention after 80% of the move is done, and then the small investor gets in and is close to the end. Mm-hmm.
So, Charles, can you explain to us a little bit more about what goes into actually building these cycles, or is it just the analysis of what has happened? Well,
the whole situation is, do things happen at random, or everything happens, with a plan? So mm-hmm. If everything happens at random, there's nothing you can predict, right? Anything can happen. So, for instance, that there is the gentleman that I forgot his name now that wrote a book about a black swan theory, right? The black swan theory says is major things can happen and influence markets, but we don't know what it is. Mm-hmm. So I also don't know what it is, but I know when it's coming. And most people, because the economists focus on why does it happen? And I don't care when it happens. I just want to know when it happens. Mm-hmm. So once you think that things don't move at random, then you start looking. This is what, let's say Newton, it took thousands of years until Newton saw, hey, an apple falls from the tree. Maybe there is something that I can figure out. But first you have to know something is figuring out. So the opinion in Wall Street is, because, I worked for Goldman Sachs many years, and so I can't say Goldman Sachs, but let's say in less serious brokerage firms, is that we don't know anything. And if you go on television and they ask, do you know where the market's going? This is, well, I don't really know, but nobody knows. So they excuse themselves by saying, I don't talk to me because nobody knows. Mm-hmm. So if it's not at random, then you have to do work and you have to develop computer systems that find the underlying laws of nature. And that's what I did already in the 80s. There is a component outside the market that I call the sunspot intensities. Now, sunspot intensity is very correlated to the market. The sunspot intensity goes up and down. And if it's high, then people are very positive. And when it's down, they're negative. But the news can be the same. Let me give you an example. If you own IBM at 100 and IBM goes 160, and IBM comes out tomorrow with the results, and the results are great, IBM can go up, right? And the Wall Street Journal will write, well, people poured into IBM because they're doing great. Now, the cycle is down and IBM is at 160 and the market goes down on IBM. So what do you do now? So now the Wall Street will write, investors to profit because they don't think IBM can do better next year. So it's not based on the facts, it's based on the interpretation of the facts. And that has an outside factor. I don't want to make it too complicated, but the sunspot intensity creates a certain magnetic field down here, which works on the crystallization of water. And as you know, our brains are 80% of water, and they're very much influenced then by the electromagnetic field and by the sunspot intensity. And what we think is free will is actually not free will. So it's very complicated, but it can be explained why things happen the way they happen. You just have to find out, and then you cannot do everything by hand. So you have to create a computer program, an algorithm that does it for you.
And takes all these things into account.
Right.
Mm-hmm. I believe the author that you were thinking of is Nassim Nicholas Taleb of the Black Swan.
I think that's his. So the fact that he can't figure it out doesn't mean it doesn't exist. And that's the situation, the whole market. Mm-hmm. I tell my wife sometimes, I sit in an airplane, people say, what do you do? I can't tell them because I'm going to get in trouble. I mean, she says, this is nonsense because, it's out of the box. They don't know about it.
Mm-hmm. So, Charles, maybe if you could you tell us some of the calls that you've made in the past that surprised even you and that ended up coming to pass?
Well, it didn't surprise me. If you would go to my website, mm-hmm. for instance, and you look in 2006, that's a long time ago, I said the whole market is going to crash, the housing market. And I said the Fed funds were then at 6.5%. And I said they will be at 0 in the first quarter of 2009. So that was a call that says maybe I should have made this a bit extreme, right? Going to 0. And they went to 0 just based on the cycle work. We had the same thing in 2000. Then I was at Goldman Sachs. And I even did some work for the Bush government. And they didn't believe me when I said the Nasdaq can go down 80%, but it went down 80%. Mm-hmm. It's not such a big deal because or the system works or it doesn't work. And thank God it works.
A lot of your work, as we've discussed, focuses around cycle theory. So can you explain to us more about your work looking at the war cycle and why wars are common in the second decade of a new century?
But it's not only, I just want to make one point, it's also price targets. Let me just talk about it a couple of minutes. Mm-hmm. If you probably knew in school that if you shoot the bullet up, then you can calculate based on the momentum how high it goes and how long it takes until it gets down. The same is true for stock market, believe it or not. The stock goes up with a certain momentum, and then you can calculate how high it goes. The funny thing is, when it's at the top, there always comes out a news item why it goes down, mm-hmm. and people think that's why it came down, but you calculate in advance. So we can calculate how long it goes up and how high it will go. Makes things very easy. Now, the war cycle, I did for some governments because I started at 3000 before Jesus, and then the Chinese Emperor Mandarin Empire, and so I have all these cycles. And I have been on television 10 years ago. I said, well, by the second decade of the new century, we're going to get in major trouble. Mm-hmm. But people who don't have much time to look at it, I give them one hint. If you Google major wars in the new century, you can start at the year 400, 500, 600, 700. Let's go backwards. Let's say now we're in a war situation. Before that, it was 1918, leading to the Second World War. Before that, it was the Napoleon mm-hmm. in 1715. Then it was Habsburg. So always in the second decade of a new century, there are big wars. Now, you can say, why? What's the correlation? I have no clue, but it's better that you know it. Mm-hmm. One more tip I give you to see how this works. Every time there is a year ending with a 7, you have a big down move in the stock market. So if at the end of 1718, it came down. In 2007, it came down. In 1979, 98, big down move. In 87, everybody knows about it, and it goes on and on and on. Until 1807, the only exception was 1929, and it was late, but that's why it had to catch up, and it went down so fast. Now, why would there be a system that when the year ends in a 7, the market's going to crash? I don't know, but you better know it. So that's what our work is based on. The same thing with wars. I don't know why it is and how it happens. I have a little bit of study. I know, for instance, that at the end of an expansion of a society, which usually takes 250 years, and that's why I'm worried about the United States, because it started really in 1750 and it takes 250 years you get now, then the debt burden is huge and the leaders are weak and you have internal strife and a lot of problems, and it usually ends in a war. Just one more funny thing to see how people repeat the history. When Rome was burning, the senators were sitting and discussing if angels were male or female. And now we're discussing, well, the world is burning, right? What the definition of a woman is. Is that funny how history repeats itself? It's a lot of work, but then you find the patterns.
That's actually exactly one of the points that I wanted to hit on with you, Charles, is, as you just pointed out, that as Rome was burning, they became very focused on sexuality. And as you say, history doesn't repeat, but it often rhymes, right?
Right. And that's why they get in a debt burden, because societies are used to do well, and then it starts to be difficult, but they want to keep the level of living and comfort up, so they have to take a lot of loans, and they take too much loans, and then you get inflation, and then you get unrest, and then you get a difference in income, and everybody's upset, and then usually politicians are looking for outside war in order to distract. So when Biden says it's not my fault, it's because of Ukraine that gas prices are high, so he likes to keep Ukraine going, because now, it's not my fault, but of course it's his fault.
So are we seeing a real culmination of many cycles, maybe downward cycles, coming together here?
Yes, I showed in December, maybe I can send it to you, so I can show it once, that the cycle situation in January was the same as in 2008, before the big down move. And that's why I said it's going to be at least 40-45% down, probably more. These things, they repeat. Some cycles sometimes are up and down. That makes it more complicated, because then you have to decide, but the computer has been programmed that the computer can come to the end result. But sometimes it's so simple that everything is down. So everything is down, and that makes it very simple.
So are your models predicting that this conflict in the Ukraine gets much worse, or does it take other countries into account as well, maybe China getting into this?
Yeah, well, what happens is what you saw in other world wars, the parties are shaping up. They're taking sides. So I think there's a side now of Russia, China, and Iran. And everybody's asleep, because the United States is afraid for an atom bomb coming from Russia, but they're not afraid an atom bomb coming from Iran, and they're much more extreme than Russia. Years ago, based on my cycles, I said the big conflict is going to be with China, and you see how slowly it's going to develop. And to my sorrow, I'm Dutch. We have a different kind of look at history, and Americans have no real understanding of history, so they don't understand how to deal with China. For instance, I saw years ago that China is really building up the aerospace industry on such a way that something is going to happen over there. But what the Chinese do is they have no outside wars in the history, almost not. Maybe I missed one. They're usually being attacked because they built up a scary army, so other people will just not do anything. So that's what they're doing. But then the Americans say, we're going to defend Taiwan. So you're challenging the Chinese. You should know what the history is and how to deal with the Chinese. But like I said, I'm from Europe, and I look at things differently than Americans.
Well, I think that would do all of us some good to just try to look at the data as it is, rather than from one worldview or another, right?
Yeah, because like I come with what Kennedy did. Maybe you're too young, but Kennedy almost was ready for Third World War because Cuba got Russian rockets. But we do the same thing. We put the rockets very close to the Russian border. So I don't even know why people are upset with Putin. He says, don't come that close and everything's going to be fine.
Mm-hmm.
And then the West is pushing, no, Ukraine can decide what they want. You can, but then people get upset and they don't want the NATO close to the border, which I understand. But I don't hear that argument. It's Putin is a criminal, Putin is this, Putin is that. So I look from both sides and I understand both sides, and it's not so simple to say who's right and who's wrong.
Absolutely. I think this conflict, if it's proven anything, it's that this is a very complicated and nuanced situation to try to understand and to account for all the facts, right?
Yeah, but in the end, they will be neutral in the end, and then people died for nothing.
Mm-hmm. In your most recent report, you said differing groups of countries will lead the economy. And right now, leading the continent is Asia, in particular, India, Singapore, China, and Australia. So are these the powers that are, in your mind, set to take over for the West?
Yes, every 60, 70, 80 years, a different continent takes over. And Europe is like in the middle. United States was on the top. And the United States going down now, and the East is coming up. For that, there's simple explanations, like the banking system was the best in the United States, and then it got behind. In Holland, you almost don't see any banks in the street anymore. There are no checks, and the United States got behind. So whoever starts all over again, like China and other countries, is then doing much better. So
Mm-hmm.
There's a reason for this. And like now, it's coming over there, and they're going to expand, and it's going to be a huge economic power. And to my sorrow, United States is going down, and Europe is just going to hang in there by the fingernails. I don't know if you can say that in English, but just almost not hanging in there.
Mm-hmm. Yeah, just by the skin of their teeth, maybe, is a good expression too, right?
Yeah.
So what would have marked, let's say, the beginning of the Chinese cycle? Is it the
Chinese? But when the Chinese cycle started, because when the expansion started, it started like in 1994, when they developed a certain kind of capitalism and communism together, and it changed their laws. And so, according to what I say, is now they should be up for 250 years,
mm-hmm.
because they just start the expansion.
And the same with India. Is it possible that with the expansion of their middle class and more capital flowing into that country, is that kind of the same idea for them?
Yeah, but you should say India is a special thing because they all speak English. So that makes things much easier to develop.
Mm-hmm. Charles, are there any of your cycles that are really flashing, let's say, red, or is it just a lot of the same things that we've spoken about today that we need to be watching for? The markets continuing lower, maybe we get a bounce here or there, but overall the West is basically in decline.
Yes, we also do the currencies, we do interest rates, we do Ethereum, Bitcoin. Mm-hmm. That's a terrible situation. You don't hear much about. I hear from my friends who had children who took loans to play Bitcoin, and they're all in bankruptcy now. It's a huge crash in the Bitcoin. Mm-hmm. So everything has a cycle, and the important thing is, based on cycles, you can see in which asset to invest. Because usually if you stay too long in an asset, there are people, let's say, who made their money in gold for the last 30 years, and they only want to trade gold. Mm-hmm. And you can tell them the investment is now somewhere else, but they stay in gold. So it's my education to tell them, look at these cycles. I mean, we did huge investments in wheat and in corn. That's amazing. But then people say, well, what do I know about wheat? Mm-hmm. And then I say, what do you know about gold? I also don't know much. What do we know about gold? Nothing, right? The same as we know about wheat and corn. So it needs some education, and it's worthwhile. If they come to you, they get 30 days for free. Go to charlesnenner.com and see how we do it, even if you don't want to sign up, but at least you see a mathematical way of investing.
Mm-hmm. You mentioned corn, wheat, gold. We've seen this in some ways, I mean, maybe correct me if I'm wrong, but we've seen this commodity cycle really take off the bottoms and accelerate over the last 2 years here. Do you see this as a top for the broader commodity index?
Well, it happened to be that we're close to a top on the grains, mm-hmm. but it's not over at all. Again, we have data going back 1,000 years of corn prices, so we can even do the long-term cycles. And it's just the starting of a bull market.
Mhm.
But try to convince people to put the money in corn. Now, there are ETFs. One is called corn, CORN, and there's one in soybeans called SOYB. So people who don't want to trade futures, and we have them, they just trade the ETFs. It's like a stock, and they don't have any problem with margin calls or whatever, and that's where they make the money at the moment. Much easier than try to hit a bottom in the stocks and look for a bounce, because that's really difficult. What we do a lot is we play the VIX. So we're not going short futures, but we go long the VIX, and that turns out to be very profitable.
And of course, that just tracks the volatility, right?
Right.
Mhm.
Right.
Excellent, Charles. Do you think that there's anything we haven't touched on that you'd like to mention today?
There's so much, but I couldn't come up with it right now. I'll leave it up to you. I just would like to stress to people, whatever is being said now, the economy is going to do great and the market is going to hold up. People have an interest in there. And if you watch on media, they usually say who is whom. And usually they have bankers or they have investment funds. And it's good for them to get you buying. And if you listen to, for instance, CNBC, Fox Business, they say, is this a buying opportunity? I never heard it's a selling opportunity. Please pay attention, because it gives you the wrong idea. And maybe look at our researchers independent, because I don't care if markets go up and down. For me, it's the same thing. So I don't have any interest to get people long, because I don't make any money if they're long or short.
Absolutely. That's a good reminder there, Charles. Of course, just to mention again, your website is charlesnenner with two N's.com.
And you can click on free trial. You get it. You get also intraday. So if you think how is it not moving at random? Look intraday, what hour the market's going up, and write it down and see at the end of the day if it really worked out or not, and you'll be surprised.
Mm-hmm. And of course, your Twitter as well is @Nenner Research. Charles, thanks so much. Oh, go ahead.
No, there's a lot of Bitcoin and Ethereum, because people are in trouble. So please look on our research of Ethereum and Bitcoin.
Mm-hmm. Yeah, absolutely. We're speaking here on Monday the 13th, and there's a lot to be paying attention to on Bitcoin, Ethereum, and Celsius right now.
Yeah.
All right, Charles, thanks so much for your time and your wisdom today.
Okay, you're welcome.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.